Hey, what's up, guys? My name is Alek Petrov. I'm one of the local real estate agents here in Southwest Florida. You know, guys, today episode of this video today, I got an amazing guy here. His name is Chris. He's a private lender. He works with all the loans from A to Z's. He can help you out, and he'll tell us, and maybe he has a crystal ball and tell us what's going on with the rates, what's going to happen in this 2025 year. Are we going to see the cuts, or we're not going to see cuts? What's happening? Will the Trump administration will actually do what they promised, or maybe not? Anyway, let me know in the comments below what you guys think. But I want to introduce Chris. What's up, man? Thank you.
Yeah.
I appreciate it. I'm so glad to have you. Tell us about yourself, who you are, and what you do. Well, how you said it. Yeah.
Absolutely. My name is Chris Pulio. I'm with the Pulio Group with Neighborhood Loans. We're a nationwide lender. I have an office here in Fort Myers in Southwest Florida. We do a lot of business here in Southwest Florida. I've been a lender for 23 years. I've been very fortunate to be a top producer for the last 13 of those in the industry nationwide. So, you know, it's an amazing time right now. You know, rates are definitely off their highs. Okay.
You think so?
They are. You know, rates were about 0.75% to 1% higher about 3 months ago than where they're at now. So, rates are starting to slowly come down.
Will they ever come down to 2% ever again?
You don't want them to. Okay? Because here's why. I know realtors, all of us, we loved when rates were 2-3%. But here's the problem. That happened during a time when, you know, COVID was going on, right? So they artificially made those rates super low because of what was going on in the economy, what was going on with COVID. Realistically, if rates go back down to that 3% range, we have other problems. Okay, so people need to get that out of their head. But, you know, I don't see that happening anytime soon.
So what do you think? What's the lowest we're going to see overall? Like, what can they bring it down to? I don't know. There's so much information out there. People say, like, let me know what you guys in the comment below, what you guys think, or what you expecting to be for the rates. Opinion. Some people say, oh, it's going to hit the high 4s. Somebody like, oh, it's going to hit the low 3s. I think it's like we're between 4 and 5, my personal opinion. But what do you think?
I do think eventually they will get there. I think they'll be in the upper 4s to around 5%. I think that's a good realistic ending point. Now, what I don't believe, and I believe that as far as the time frame of getting there, I think people thought immediately after the election rates were just going to immediately come down. There's so much misconception and disinformation on that. Same thing with the Federal Reserve, right? So people think that when the Fed cuts the federal funds rate, that interest rates automatically go down. The federal funds rate actually cuts the overnight borrowing rate that banks borrow at, car notes, home equity lines, credit cards. There is a trickle-down economics effect that does affect mortgage rates, but it's not a direct correlation to the 30-year fixed. Okay,
So
give you an example.
You gotta speak to a regular consumer, right? Like you talking right now. Like I know what you're talking about, but if somebody's watching, like, oh, this rates and this rate, my head's about. You make my head hurt. So what do you think?
Perfect example. I'll give you an example right now.
Come on, let's go.
Last time the Fed cut rates,
Uh-huh.
mortgage rates went up 0.25%.
Yeah.
Okay. The reason for that is when they do that, they give information out afterwards. And the market reacts to that information of what's going to happen in the future. So if they're talking about inflation, right? If inflation goes up, what happens to interest rates? They go up.
Yep, they go up too.
Here's the one thing I'll let you know. Here's the one good thing about Trump, okay, which is going to help interest rates. He's unpredictable. Okay,
Don't we all know that?
whether you're pro-Trump or against Trump,
Yeah.
and when there's market volatility, interest rates tend to go down because investors then buy the investment to the common consumer who doesn't know, that would then drive interest rates down. So the more concern or fluctuation in the market, or when stability kind of leaves because they don't know what's going to happen with tariffs or with this or with that, people go to a safe haven, which is buying bonds. And when people buy bonds, that's when interest rates go down. So that's why I think you've seen interest rates go from the mid 7s. Now we're into the mid to upper 6s, depending on your profile.
But what do you think right now? Like, I know last year, freaking, they were saying like in January, like, oh, this year in 2024, we're gonna do 10 times cut rate. It's gonna be about, I think they cut 10 times and they raised 15 times, in my personal opinion.
Right.
That's how I felt
Right.
at 2024. What do you think, like right now moving forward, if it's a buyer watching, right, or a seller, obviously, like the listings right now are sitting in the markets, especially in Florida. I know Chicago's a whole different beast there. New York, whole different beast there as well, and it depends what part of it. But like Florida, we have so much inventory in the market, and all the buyers are sitting on the sidelines, and sellers are struggling. Like they want to sell, they want to move back to their kids, they want to just upgrade a home because the home is too small for them. They want to move to a bigger home, or they want to buy a house on the canal with the boat, right? And things like that, which is cool. If you need a home on the canal, let me know. I got you. But point is that if somebody sits on the sideline, what can you tell them about the rate? What's in the next future, for example, next 6 months, right? Well, nobody has a crystal ball, and obviously we're not going to be 100% accurate because we don't know Trump, what he's going to do. We don't know what the Feds are going to do because, they get into their political war and don't get started. But what do you think? What do you think?
There's a couple things. So, first and foremost, I think rates, they're not going to just tank overnight. I think you're going to see a slow, methodical downward trend. I think over the next 6 to 8 months, you're going to probably see rates maybe come down another 0.5%. You might be able to get a government loan around 6%, conventional maybe a little bit higher than that. Yeah. But here's the difference between this. This is why I love the Southwest Florida market. Okay, Chicago market, New York market. You're right. I'm licensed. Our company's licensed in almost every state. I'm licensed personally in 35 states. Here's why I love the Florida market that so many people are not talking about. As a buyer down here, you can go to a seller and you can negotiate something in like a 3% seller credit. Okay.
Oh yes, tell.
Okay, so
a lot of agents, like if you're working with the agent and they're not telling you this information, like seriously, send a link of this video to them. I had an agent, the deal fell apart because exactly of this information, the agent was lack of it, and the lender that he's using, buyer was using the lender, he didn't explain them the right way. So I really want you guys to pay attention to this because this is, if you're a cash buyer, it's a whole different ball game part for you. But if you're doing financing, please listen to this part. Ignore the whole video except this part. Let's go.
Right. And this is what I love. So if you get a 3% seller credit, you can do something no matter if it's conventional or FHA, VA. You do a program called a 2-1 Buydown. So let's say rates are 6.5%. The first year rate you actually pay at 4.5%. The second year at 5.5%. It's still a 30-year fix. But here's why I love this program so much. It's not like you come to closing and you pay points, and the minute you walk out the door, your money's gone. Okay. If you do a 2-1 buy down, it goes into an escrow account and it supplements your payment. So that credit goes into an escrow. Let's say your payment's $2,000, but you owe $1,500 at 2% less. $500 comes from your escrow to make your payment whole every single month from the servicer. But this is the best part. The minute, let's say rates go down, let's say you're at 6.5, you're paying at 4.5. You're on your 13th payment. Now rates are around 5.5%, and that's where you're adjusting to. We could redo your loan at 5.5 for the full 30-year fix, and whatever money is unused in that credit that supplements your payment gets deducted from your payoff. You don't lose the money. And that's why I love it so much. And sellers, if you're a seller in the Florida market, talk to your agent, call Alek and say, advertise. We are going to advertise with a 3% seller credit so you can do a 2-1 buy down. And if you could do that and set yourself apart from your competition, now you're actually going in there saying, hey, you're going to pay the first year at 4.5%, let's say, if you qualify for that interest rate, right? And what a huge difference on a $400,000, $500,000, $600,000 loan. You could be talking $700 less a month in your first year payment while you're waiting for interest rates to continue to go down. Oh, and by the way, if you do your purchase with us, anytime you refinance in the future, we waive all of our bank fees. So you won't have to pay underwriting, processing, origination again, so I try to save you where I can. And talk to your lenders, even if you're not using me, talk to your agents. If you need a second look, we're not trying to steal your business. I'm not trying to steal your loan or anything like that. If you ever need a second opinion, give me a call. I'm happy to look through it or talk to you about it. Because there are so many great products out there that you can get in and it's not as expensive as you think. Think about this. You can get a 3.5% down mortgage and pay it 4.5% for the first 12 months. And it's still a 30-year fix. There's so many great products.
I know. We got one. Dude, telling we got the one FHA loan was 3.5%, and we got a 6% kickback from the seller. I mean, that just like that was a killer deal, by the way.
So a 6% seller credit, because that's the max you can go on a government loan. You can get 6
FHA
credit.
loan, only FHA loan.
Right. Conventional, it's less. But what we ended up doing was taking that extra 3%, making sure all of his costs are down, and then still additionally brought down the rate. So back then, that rate was 7%, right? The market was higher.
Yeah.
We actually locked him in at 6.5%, used one of those percents to buy down the base rate, and then still paid at 4.5%. So his first year's loan was 2.5% less than market, saving over $800 a month in payments.
Yep, there you go, guys. So if you're a buyer, so if buyer watching right now, right, it's a seller's like, oh man, I got some hope now, right? Maybe by Memorial Day weekend we'll know more information what's happening with the rates. But you know, we got some inspiration for the sellers, but now the buyers sitting on the sideline watching this TikTok, this Facebook, reels and all this stuff and shorts. And all, when you catch this vibe of negative things, it's all about, oh, the market is crashing, this, that, condos are crashing, and this is crashing, and this is crashing. I'm gonna wait for 2008, guys. It's been already what? It's my math is bad right now, but it's 17 years, guys. It's been 17 years since 2008. In 17 years, you could have paid off half of the mortgage of your property.
Well, not only that, you know what's a great example of that? How many people, when the market was crashing in 2008, if you're looking to buy a home for the long term, not a 2-year investment, but if you're looking to buy a house for 10, 15, 20 years, okay, all those people that freaked out in 2008 and said, I gotta sell, right?
Yep.
What are those same houses worth today that they were in 2008 when they were going down, right?
Yeah.
They're $250,000 higher than in 08 when it crashed.
If not more.
Yeah, if you are looking for a home to stay at for 10, 15, 20 years, and you need to buy, don't wait, because if rates do crash and come down quickly, then we're gonna have another problem because values are gonna shoot way up again and all the inventory is going to disappear because you're going to have the people in Chicago who haven't bought second homes or in New York because rates are high and like, I don't want to finance a second home where I'm only down there for 3 months. If rates are at 4% or 4.5% again, guess what's happened? All this inventory is getting sucked up because all those people are going to come back into the market. They're going to finally buy their second home down in Florida.
And they're going to overbid too.
Yep.
And they will overbid. Like we saw in 2020, 2021, they were freaking overbidding all the homes.
Yep.
And it was horrible. It was horrible, especially for local people that are here in Florida. So if you're a buyer, what would you do or what steps would you take?
Well, the first thing is obviously you need to be pre-approved, right? Before, if you
talk to me, I'm a dummy. I never bought a house. I don't know where to start. I just graduated from high school. I just graduated from high school. I have no idea what's going on. But I do get a good job. I got a good job that pays $200K. Well, not in our market, but yeah.
Well, the first thing you're going to do is you're going to call me, right? Or your agent's going to give a introduction to your loan officer. What we're then going to do is I'm going to talk to you, ask you some basic questions of just to get to know you, right? And if your loan officer is not trying to understand your wants and needs and asking you questions, well, how long are you going to buy this house for? What's your family situation? Are you close to getting married? Do you have kids? Do you have this? Those are all questions to really look at so that way you can get into the right home that you're looking for. From there, I'm going to send you to either my website or I'm going to text you over a link. And there's just a quick apply now button for you to fill out this information on a secure portal. At the end, it'll ask you to upload some documents. Within 24 hours, me and my team would get you pre-approved. And from there, I would call you back and we go through a bunch of options. I said, listen, you can get pre-approved to X. That does not mean that's where you need to buy, right? And that's very important. People think, oh, I got approved for $400K. Are you comfortable at that $400,000 loan mark? You may not be. So then we kind of back in to say, okay, you're comfortable at paying $2,000 a month. What does that look like? And again, that's an important question that your loan officer should be asking you. They need to care about the transaction and care about you as the buyer. You can't just be a number at the deli line. I'm not going to push a loan or push a loan amount to you because you have to be happy. You don't want to be house poor. You want to enjoy your family. You want to enjoy the sunshine of South Florida, right?
Yeah.
Take it from somebody who spent a lot of time both in South Florida and Chicago. I can tell you what, February down here in South Florida is a lot nicer than February up in Chicago. But so you want to be able to go outside, enjoy those things with you and your family.
That's a good point, Chris, that you brought up. Like, I know when I was buying my house, I was doing great in my business. I got pre-approved for, I think, $1.2 million. And I'm like, the desire were there to go by on the canal, right? To just be up there up front and just have the access to the golf. And I'm like, what if I'm not going to do so well in 3 years, 5 years? Because I'm not trying to sell. I'm trying to hold the house for 10 years at least or more. I'm like, I'll be screwed, right? So I'm like, you know what, screw it. I'm going to find that's my one that be more comfortable at and still have those highlights that I want in my house, because right now it's a buyer's market. You can choose a property. Well, Chris was talking about if the rates drop too crazy, too fast, and you have all these people coming from north and just bombarding our market, good luck getting a house. A study showed 80% during COVID time, people who bought houses regret buying their house not because of the home, but because of the location and some things that were just not there for them, like the master bedroom wasn't big enough. Right. They had 2 vanities in the bathroom, but they have to submit an offer that day. As soon as they leave the house, they have to submit an offer, or the house is gone and somebody's gonna overbid it. So that was the crazy part. So, but right now I have buyers. We go in, we look for a couple of days, and then we see what they want. We get to choose, a couple of homes. We go look 5 homes here today, 5 homes tomorrow, and then you're like, okay, cool. Like this is what I want. Like this is exactly what I want. And it's like, and you can buy it and you can negotiate for the rate down. So,
and not only that, I'll leave you with this: all you people in other markets such as Chicago, New York, Philadelphia, where there isn't any inventory, where a house goes up for sale and there's 14 offers in 5 minutes and the houses are still being driven up.
Crazy.
Okay? That's still happening in those markets. If you live in those markets and you ever thought about, hey, I would love to live and move down to Florida, think about this. You can get top dollar for your home in Chicago or the western suburbs of Chicago because there's going to be a bidding war. And you have house prices here that have stabilized or have come down a little bit, where you can get twice as much for the price in South Florida than you can in the western suburbs of Chicago or the suburbs of New York or Philadelphia or New Jersey. So if you ever thought about moving to South Florida, now's a great time, because you're going to get $100 grand more for your house up north. You're going to be able to reinvest that down here, get twice as much house for about 70% price that you would pay up there, and you could finally live and not have to worry about shoveling snow and do all those things and bundling your kids up and every time you go outside. So that's also a great thing. Take advantage of the dollar and economics of it if you ever wanted to move down there. Sell high up north, buy down where it's been stable and more inventory, and you will get the most bang for the buck.
Well, thank you guys so much. I know it's been a very long video for you guys. Appreciate you guys watching the end. Please don't forget to subscribe to my channel. Hit the like button as well. If you need more information for Chris or any loan needs that you have, if you're in any of those states that you talked about, here, Southwest Florida, Chicago, or other 39 states, you can call him and ask him directly. I'll put his information down below as well, and you can schedule a calendar link down below, a meeting with me one-on-one. Go check it out, my other video. Thank you so much for watching this video to the end. Peace out and God bless.
Thank you.
More Chicago. Joking. Peace.